hydrogen ecosystem in Adani New Industries. India's largest airport platform as Adani Airports, Adani Digital Data Centers, roads, and primary industry. The issue here is the further public offering of partly paid up equity shares of face value of ₹1 each by way of fresh issue aggregating to up to 20,000 crores. The company shall raise the gross proceeds on application, with balance monies being raised in subsequent calls to be made by the company from time to time. The price band for the equity offer has been fixed from rupees 3,112 to rupees 3,276 per equity share. The retail version of the offer will be at a discount of rupees 64 per equity shares for retail investors. The offer opens on Friday, January 27, 2023. The anchor investor bidding date shall be one working day prior to the bid offer opening date as a normal basis. The offer will close on Tuesday, January 31st, 2023. I just want to add here that this group has been created by the promoter over the last 40 years. And one step at a time, just let the heart beats, they will be shouted. I will now hand over to the moderator and thereafter the management team, led by Mr. Rahul Singh, to take you through the business presentations for this afternoon. Thanks a lot.
Good afternoon, everyone, and thank you for being here. On behalf of the Adani family and Adani Enterprise, I just take the opportunity to firstly thank you for your attendance in all the cities. Our team members are there. So most days, if there are any questions, you can please speak to the relevant team members. We have a short presentation to introduce Adani Enterprise and what we intend to do as part of this issue. Just as a brief summary of the group, next is just as a brief summary of the group. Adani portfolio of companies, we have 5 major listed companies. Sector, Adani Ports, 4 in the energy space, Adani Green Energy, Adani Transmission, Adani Total Gas, and Adani Power. All of these companies came out of Adani Enterprise over the last 25 years or so. Further, alongside this core infra and utility portfolio, next please, we have our primary industry vertical. In this vertical, we have our listed company, which is the power cement business, which we recently acquired from Abuja and East. We have a main business in B2C, of which currently independent industry at least we don't have. Within Adani Enterprise, which is our incubator, as with everything else in our core portfolio, the major incubating assets, slow down Sandesh, major incubating assets.
whatever is completed that, and the 50 billion rupees, the remaining 50 billion. Can you expand a bit on how the 50 billion rupees will be utilized? Thank you.
No, I think your question is on the, also if I understand the question, you're asking question related to the general corporate purposes, the amount allocated.
Yes.
Yeah, well, that's what the corporate purposes, that's the allocation. So it's various steps you need to take in relation to organizational development, preparation of business integration, integration with our back office and support structure for the business. So their preparation for development, preparation of policy structures, board preparation of various businesses, and so there's three of steps that are required for organizational development for the incubating assets. Which, as you see, the number over 6 now, plus continuing the development of the digital infrastructure in relation to integrating various hard infrastructure assets into a digital platform, and all the work that goes into that operatively. That is what nonsense.
Hi sir, this is Ankur Mishra from ET now. My question is in continuation of what was asked. On the businesses where you will be deploying the capex towards the airport, road and infra, in the past we have seen that those companies have been hyped out or listed as part of your plan. Is there any consideration in the future that you are going to consider the same for airport as well as green and these companies, subsidiaries where you are deploying your capex?
We should, can somebody from the state the question from me, please, so I can hear it properly?
Businesses like transmission and Adani Green and Adani Total Gas. So the question is, do we have any consideration that in the future we are going to hive out businesses like green hydrogen, airports, etc.?
No, that's what the incubator is. Incubator will not deal with the businesses in itself. So, as we have done in the past, once the business meets certain tests, broadly I can share with you there are 3 key tests. Those 3 key tests execute on its business plan. Number 2, its capital structure is stable, and number 3, it has the organizational capability on 2 key areas which are central to the group's philosophy and the philosophy of the firm. That is, that the business has the capability to execute the projects it undertakes and can operate its assets in the world-class manner.
Hello. Robbie sir, you need to reiterate your point number 1 because you lost it.
Available or emerging.
So is the response clear to everyone? Okay, so I'll just repeat what Robbie said. That as a part of AEL's incubator story, this is what we have been doing over the past, and we've seen successful businesses like Adani Green, Adani Transmission, Adani Total Gas, and this is what we will continue to do. The businesses will be hived off at a time when they have matured to a stage that they can sustain themselves, both in terms of financial requirement and capital management, but also in terms of management capability and organizational development. And these are also in line with what the culture of the organization and the group has been. And we expect that over the next few years, we will be incubating these businesses, and then once they are on their own 2 feet, they will be emerged out. From a shareholder perspective, they get dollar for dollar shares in these businesses. So today, if you're investing into Adani Enterprises, you are getting that many shares in these businesses also, and eventually when they hive off, you have the ability to individually continue to own these businesses.
Mike over here, please.
quarter or something like that? Can you just give some more clarity on that?
So Robbie, the question in the room is, this is the first time that Adani Group is getting into the water business, so they wanted a little more clarity on that.
Right? Adani Enterprise is water is the core element of infrastructure, and we have been in the core infrastructure portfolio for the past 20 odd years. So it's an area for both for water treatment, water distribution, and all eliminated water management. Is a big scope for private sector to participate, and we are we have a very small water business which we continue to develop and see how we can build and scale it. It's important that elements of core infrastructure, water, energy, transport,
free up your balances with lenders. It's also the rationale for repaying the ICPs, because at least with the airports company, you have about 10 year or 2028 is when the toll is due.
So, Anupam, can you please?
Robbie, the question is that in the objects of the issue, they see 4,000 crores as the debt repayment, and they have a question.
I'm very sorry for you breaking up. Please, can you repeat the question again? The sounds really poor.
Yeah, sure. So the question is, in the objects of the issue, around 4,000 crores has been shown as the debt repayment, and there is also debt repayment of intercorporate deposits. So the question is, why are you repaying intercorporate deposits and not repaying term debt at the individual SPV businesses like airports, etc.? And so that was broadly the question.
I think that is please don't take it the wrong way. I think that question comes from the fact that there is we obviously have not been able to explain what incubator means properly. See, incubating businesses need to develop its capital structure based on its capacity to incubate new businesses. It is not the object of the incubating entities to alter or manage the capital structure of the already operating businesses, unless it becomes absolutely necessary. So the airport business itself is already highly rated, and its capital structure is already rated by 3, 4, 5 rating agencies. Therefore, it is not, we don't want to intervene in a business to disturb its capital structure. What we need to do is to build capacity for the enterprise, to create, develop, and enhance the ability to incubate highly successful new businesses. So I think we have to be very, very clear that this is not a question of corporate action like a typical corporate, that every action is related to balance sheet. No. This action is related to creating value and growth and businesses that are sustainable in the long term for their own value creation. So please don't confuse the two issues which are related to the capital structure of individual businesses developed on the basis of the risk of that individual business, not on what Adani Enterprise does. So for example, airports capital structure, roads capital structure is developed, which we have, and Anupam's team is involved in those things, along with the CEOs and CFOs of the relevant businesses, which we call the capital management plan. So that is a specific risk-based capital planning for that individual business. This exercise is not an exercise for those businesses. This is an exercise for Adani Enterprise, and therefore focus is on building capacity for Adani Enterprise to continue to do what it has done in the past 20 years. That is to create value and growth. Thank you.
Mr. Singh, Anurag Joshi from ET Now. Could you elaborate on the Adani Group's ambition and its goals on telecom?
We have no goal to ambition.
Sorry, you have no goal.
We have a lot of ambition in digital space, data, servicing for 400 million people broadly that use our services, but specifically for telecom, we have no such no plan. We don't have any specific.
Hi sir, Ankur Mishra once again from 80 now. I wanted to know, was there any consideration of different other type of issues as well, right? Rights issue. Why did you went for FPO?
Very simple, two-part answer. One, we wanted to expand the shareholder register. Right issue does not expand the shareholder register. This will bring in new shareholders. And although there are ways to do that in the rights issue as well, but nevertheless, this is clean way to bring in new shareholders. Second, and it's very important element. This allows us to further increase the participation of average normal Indian mom and dad as shareholders in the Adani enterprise. It is very, very important for us that Indian public is able to participate in the wealth creation story. And so they become part of the wealth that is being created in the country. And one way to do that is to encourage participation in the equity markets. And we believe that it is one of the overarching goal of our founder. And it's very important for him that the ability to create wealth reaches the remotest corner of India. And therefore, our objective to reach to as many retail investors as possible in more than what we already have. And that's why we went down the route of the FPO. For these two reasons, expand the shareholder register and encourage and support and as much as we can participation by people from the remotest corners of India so that they have become participant in the wealth story of India.
Hi, I'm Sabi from Business Standard. I want to understand what are the considerations gone into raising 10,000 crore now and what will be the considerations when deciding the subsequent tranches, and if you can give a timeline as to when the call will be executed.
The consideration generally is on the basis of just the overall what we term as capital management plan for Adani Enterprise itself, and whilst no need to raise capital that is not immediately required, so it's over a period of time. And the other thing we also wanted to do was to give good, as I mentioned in my earlier answer, is to provide confirmed price to the investors. Obviously, there is market movements, subject to market movements, a good runway to investors for the next 12 months. As these businesses mature, we believe that the maturity of these businesses and subsequent disclosures that will occur in the next 12 months will be net positive, and that's why we thought that this would be the best way to ensure that the retail investors and investors generally who come into this issue do not have an obligation that we actually, because our capital management plan does not require us to have this capital straight away, that we can phase it out in the next 12 months. So the timeline of it would be specific issue of the board of Adani Enterprise, but it would be over the next 12 months.
Given the market volatility, do you think raising 20,000 crore in one shot would have been a challenge, or was demand more than
See, market volatility is we are. See, Adani Enterprise is already 27, 28-year-old company. We've been there for another 30 years. We can't make decisions on short-term market volatility for long-term capital gestation projects and incubation. So it's very, very important to understand we are not trying to maximize or trying to optimize at each market situation with the capital. We have even in the past, since 2015-16, we raised capital based on the requirements of the businesses. Because over the longer term, all this volatility trend for India, given that we grow at India growth at 6.5%, 7%, is upwards only. So we are inherently optimistic on the future of India. So in the longer term, this volatility aspect doesn't mean much. In the short term, yes, but as a long-term shareholder of the company, as ourselves owning close to 70% of the company post we are comfortable that and we don't plan them on the basis of quarterly or weekly or monthly or even 12-month volatility. Aim always is long-term value creation on a sustainable basis. So it's not a factor in our consideration.
So this is R.N. Gupta from Money Times. Your group has grown beautifully mostly by debt funds. Now you're trying to correct your leverage. Is there a benchmark that you've set in the entire group?
Anupam, sorry, could you please repeat for the stage?
Your group has grown mostly by debt and now you're taking corrective action to reduce the leverage. Is there a benchmark figure that you have fixed now here onwards?
I think with due respect, your premise itself is wrong. As I mentioned in my opening second slide, our portfolio companies are rated credit-wise same as the Government of India. You can imagine, just imagine your question in a slightly different context, please. If you think we need to take corrective debt action, we are the highest rated portfolio in the country today. Can you imagine the state of affairs at other companies? So I think the premise itself is faulty. Although I can understand news flow, but from a credit point of view, your premise of your question itself is incorrect. So the short answer now to your question, no. This is purely an action to facilitate the emergence of the next infra and energy companies from Adani Enterprises. It is nothing more than this aspect, and the issue structure is based on, as I mentioned in response to an earlier question, expansion of share register and participation of the retail investors in the growth and value creation story of India.
This is related to the entire group because I saw a video of the interview with Mr. Adani when he said that yes, now we will be raising equity and whatever we will be taking action. It was in relation to that. I may have missed this time because I came late.
No, I think I don't want to debate with you here, but we can answer that in a different setting. This is Adani Enterprise. Even the group level, I think you misunderstood what Mr. Adani. This exact thing we are doing today was well flagged as part of our capital planning program in 2015-16. See, now we have been doing this since 2015-16. Today we are doing public market. Before this period, strategic investment. Last year, April, IFC invested $2 billion in the group as primary in Adani Transmission, Adani Green, and Adani Enterprise. Last year in May. Before that, Total invested in Adani Total Gas, Adani Green, terminals business, and we signed an MOU for the hydrogen business. Before that, QIA invested in Adani Transmission and Distribution. We have been doing this for a long time. It is just that, and that's what we're doing this with Varsha team and Aman, everybody, and Adventures. We just have to make sure that since 2016, we were not able to disseminate the information properly. We acknowledge our mistake, and we are now making sure that this information is disseminated. I think the capital planning is now nearly an 8-year-old story. Equity raising is nearly a 3-4-year-old story, and this is just the step in that direction to complete our first 10-year plan that we laid out in 2015-16. That we will do these things and complete Adani Group's capital management planning exercise consistent with its underlying development, origination, and operation requirements by 2025-2026. It's nothing new. It's been written down, flagged, presented. Obviously not in media setting, clearly because you at least you have clearly listed out, and therefore we are doing it now. And hopefully that next time this question will not be there.
Okay, thank you.
Sir, Piyush from BDN. Just wanted to check if there are any planned acquisitions from this fundraise that you're doing apart from the allocation to the subsidiaries? And if yes, in what sectors? You just acquired a media company, so if you can throw some light there.
No, I think I would, if we had anything that would be part of the object clause. Object clause is a comprehensive use of proceeds statement, and beyond that, there is nothing that we have in mind. Otherwise, we would be disqualified.
Sir, we saw that despite the largest FPO issue, the shares are a bit down 3-4% today. So, what's actually the market taking from this, and when will you be doing your next fundraise? Like after this 20,000 crore, when could we expect you to come back to market? Thank you.
No, I think the share price, I think the question of volatility was there before. We cannot fundamentally decide long-term investment planning on gyrations in share price on a daily basis. So which is okay. Those things are something that as a leadership team we take into account, but that does not inform our fundamental business decisions. But you have to still remember, even after this issue, the Adani family and our strategic investors who will also long term, they will still have close to 77-78% of the shares in Adani enterprise. So we are long-term shareholders. So for us, this short-term issue is not the point. We do not have specific further plans in relation to a beyond this from a public point of view. So this is a good opportunity for new investors to participate in the value creation story of AEL.
Hi, this is Arijit from Economic Times. I had a question in terms of Adani Enterprises is the holding company of the group. It is also the incubator for businesses which are largely capex heavy in terms of infrastructure, utilities, etc. Now, at a time when ESG is becoming more and more not just vogue but a very critical factor for investors, equity investors especially, do you feel the overhang that Adani Enterprises has vis-a-vis coal could be an issue with, when you talk about attracting marquee institutional investors from around the world? Is it in time to perhaps hive it off into a separate?
One of the biggest debates in the modern workplace is around moonlighting. And joining me now at the India Today